My name is Kyle Willis, and this is Marketing from the Roosevelt Room. Welcome back to Marketing from the Roosevelt Room. We are continuing our series on the complete entrepreneur. This topic is going to be one that can make or break your business. It is not the most sexy topic. It is not the one that people wake up and take all of the courses for, but is the most important and the one I'm probably most excited for because as I got to know our guest, Adam Rundle, he's made some significant impacts in my business all around the aspect of accounting and finance and how to make sure you position your business to scale effectively and in a smart way. Adam, thank you for being with us today. I think we're going to get in some really good, juicy stuff as we get going here.
Thanks, Kyle. Thanks for having me, man. Yeah, I'm super excited to be on, man.
I love it. You know, Adam, so for those who don't know, if you kind of give a little intro of who Adam is, he's the owner of ABR Consulting. They're a strategic consulting firm for accounting, tax, finance, and they specialize with digital marketers, coaches, and consultants. As a digital marketer running a digital marketing agency, and, you know, I've been able to sit down with Adam before and say, all right, bro, here's my business. Here's where I'm at. What are the pitfalls I need to be mindful of? And I think as we get into some of those today, you know, I'll jump ahead to say Adam is a master of taking the complex and turning it very simple. So that way his clients, when they sit down with him like a virtual CFO, they really actually get a glimpse into the health and wellness of their business. And they're not just looking at some big profit and loss statement or cash flow statement saying, what the hell does this all mean? So Adam, you've really taken, like, you know, I don't say the non-sexy part of accounting lightly. It's like you've taken something that most people find boring and you've made it extremely practical and actually exciting because people finally understand what the hell is going on within their business.
Yeah, thank you. I would say there's nothing sexy about it. So it's like you're trying to uncover something that you know doesn't exist, but you're trying to make it sexy so people can pay you. Because people only buy sexy, man. That's just like the world. Like people want sexy,
right? Yeah. Well,
I thank you for those words, and I think my response is pretty simple. It's like it doesn't have to be sexy. No. But it is necessary. You know, yeah. Accounting is this like thing that people go like, oh shit, accounting. So it's going to do this debits and credits and how do I read this stupid statement and stuff. But the reality is it's like, well, that's the reason you went into business. Yeah. So that financially you can succeed. And so if you're not going to measure that and you're not going to understand what that looks like in your business, then you kind of like digging a hole and putting your head in the sand and being like, and that's just not a clever decision to make. And I strongly believe that there's no entrepreneur out there that wakes up in the morning deliberately focused at ruining their business. Yeah. Everyone wakes up in the morning with the 100% goal and desire to succeed. We all want to do it. So what is our goal? Our goal is to get as much information, resources, help, support, knowledge, whatever the word is you want to use or words you want to use as possible so we can make these decisions every single day to advance our businesses forward. And one of those, there's hundreds of them out there. One of those is finances, because at the end of the day, you're going to measure the finance and you're like, oh shit, it didn't work. I'm running out of money now. I've got to go back to my 9 to 5. Or it's going to be like, shit, it's working. That's great. I can grow bigger. I can support more people. I can grow my vision, grow my brand. And that's what we want to do. I mean, that's the whole point. So if you're not going to be measuring the finances of it, well then, what's the point? It's like, and I've used this example and I think you would appreciate it. Like sport and businesses, there's so many analogies. Sport and anything in the world, you can draw a lot of analogies. But it's like, imagine playing a football game and there's no score. Yeah. It's like, kind of, what's the point? Like, imagine you went to the Super Bowl final, but they're like, oh, in 6 months' time, we'll tell you what the result is. Like, no one's going to go watch it. Doesn't make any sense. The whole point is you want to see what the outcome is. Like, that's why you are playing the game.
Yep.
In business, like you want to see, like, hey, is this freaking working? Like, I don't want to keep doing this thing that I'm doing unless it's working. So how do you know whether it's working? And one of the most powerful ways to know whether it's working is your finances, because they don't lie. They tell you. They're not subjective.
There's no way to fudge that report.
There it is. Yeah.
So Adam, in being able to take that complex, being able to get into the foundations of what accounting is, I always love just by starting off by hearing your story. But what made you wake up one day and say, I love balance statements. I love profit and loss. I love the data. And
I'm still waiting for the day when I wake up and say that.
Okay, good to know. Good to know. I may have told you this before, but when I went to the University of Washington and got my degree in marketing, as part of our requirement, we had to take accounting classes. And I think I ended up taking 3 or 4 of them. Well, all my foundational courses were at 8 a.m. in the morning. I lived off campus at about almost an hour away. So I had to take the bus there. And I slept through all my accounting classes. It was that deal where I just had zero momentum. And it was that attitude of, I'm not going to be an accountant, so therefore, why am I really studying this? Thank God for the group studies to actually help me pass my test. And when I launched my agency, that was the very first thing I outsourced, because I said, there's no way in hell I know what to do here and how to actually make sure I know if I'm in the green or the red. So thank you for being the person to listen to your teachers and professors in those courses. What made you say, though, that this is where I want to begin? This is what I want to launch a business around, and I've now built a very successful firm working with clients all over the nation, if not internationally, to really serve them, help scale them.
Yeah. So I studied accounting like anyone else, went. I'm from South Africa. I'm pretty sure most of the people listening would be like, hey, that guy's not from around here.
That's the sexy part about you. That's how you make accounting sexy.
Exactly. I just got an accent. People are like, oh, that's pretty cool. It sounds different. Maybe.
I'll listen to him now.
So yeah, I grew up in South Africa, and when I finished high school, went off to college. And college in South Africa is a little bit different. So you can kind of major in something from the start. You don't have to kind of be an undergrad and then go and major in anything. And so I just did accounting because it was the thing that I thought was going to be good for me. I don't know.
Yeah.
Math, and I enjoyed accounting at school, at high school and stuff. So I studied it and I graduated as an accountant. And then I made a decision that one that I probably shouldn't have made, but I made it anyway. I was trying to coach rugby. Like a big, massive goal in my life was to become a professional rugby coach.
Yeah.
And so in doing so, I didn't want to go into the working world. So I actually didn't want to go into like one of those big 4 firms and slave away the next 3 years of your life as like an intern.
Yeah.
And so I decided to do my master's in tax so that I could have time to continue coaching rugby. And at the end of that process, at the same time, I got a job at a law firm that was kind of part-time, just helping out on the finance side. And a year later, I was basically the financial manager of this law firm, 30 people, and I worked there for 4 years. And I, for the first time, actually got a sense of like, hey, I've learned all this stuff on this piece of paper, this like debits and credits and all these things that you learn in accounting.
Yeah.
And for the first time, I actually started realizing how it all works. Because now I was sitting in a business that's making a ton of money. I've got all these employees trying to do all this stuff. And then I'm getting asked these questions. Like, hey, what does this mean? What does this mean? What does this mean? What does this mean? And I'm like, I know all the theoretical answers because I learned them, but they're very different in practice. They're like very different when you're actually doing it. So I went through this experience of like, shit, this is actually pretty cool. Like, I actually quite enjoy this, not necessarily the accounting side, but the link between the two. It's like, how do you take accounting and what does it mean for a business owner? How do you communicate this? So I really started enjoying that. And then my wife and I decided we wanted to do something different after we got married and we moved to the States. We now live in Annapolis, Maryland. And at that time, I started my own accounting firm. I actually had one previously in South Africa for about 18 months before we came. Real estate investments, don't have to get into all of that. That's a waste of time. I started this accounting firm and started working with a guy named Dave Rogamosa from Proof Technologies. I don't know if some people listening may know who Proof is. They eventually went to Y Combinator, SaaS company. And through my involvement with him, I had the same kind of experience helping him understand his finances, same on a much smaller scale that I'd had at the law firm.
Yeah.
I was like, hey, this can work. Like I've learned the skill of taking something that's very theoretical and very rule-based and how to communicate that to other people, like to people in a very non-rule based, fundamentalist way, just like very layman's term. And I really enjoyed that. I'm a coach by nature. I love coaching, so it's all kind of fitted in. And so that started the snowball of me starting this firm, and then got a bunch of people through that connection. And then we built out an entire accounting firm. Now we do everything. We do bookkeeping and taxes and payroll, and we do everything on the back end. But my job, like what I do, is I meet with business owners and I help actually use that information. Like, what is this? There's a bunch of numbers on a piece of paper. So what do I do now? And how do we answer those questions? Because those are the questions that actually matter. Because the numbers don't mean anything unless you can use them to help grow your business. So that's ultimately what I do. And that's kind of the journey to where I'm here.
I love it, man. That's huge. And, I like that aspect of being able to take what the origin story is and being able to take the process you've gone through and be able to start small, be able to start, you talk about, I think you said his name was Dave from Proof, and be able to say, hey, I've validated who I am, what I know in a business. I've made it very practical, and now I'm going to scale that. As you've been working with a variety of different businesses, but predominantly the digital side of businesses with marketers, coaches, and consultants, it's one being in that place. I'd love to just hear a little bit of insights of kind of what are the usually the first challenge, when someone's just starting in their business and they're saying, hey, I want to get going, I want to launch my business. What are usually some of the pitfalls or the first things you have to fix when someone comes in and hires you to say, look at my finances, how do I make sure I don't go bankrupt?
Good question. So I want to answer this. I want to say something a little bit off topic, but to get back to this point.
Totally. Yeah.
Because this is where it starts in my mind, is what I learned when I really dived in. And it's funny enough, I started with a SaaS company, and now I don't work with any more SaaS companies. I'm not interested in working with SaaS companies. I work purely with digital marketers, agencies, coaches, consultants, course creators, like very, very online service-based business models.
Yeah.
What I want to say is these are super, super, if not some of the most simple business models there are out there. And I'm not afraid to say this, that it's kind of like a cop-out as an accountant, because it's if you're working in like real estate, or if you're working in manufacturing, you're working in kind of those industries, accounting is far more complex than it is in these, because then you're like dealing with inventory and cost of goods sold and trying to manufacture something. How do you price this thing? Is it first in, first out? Are you valuing assets? In fact, all the stuff that you actually spend the vast majority of your time at university learning with this accounting world, you don't even have to even think about when you're running something as simple as, an online digital marketing agency, or if you're a coach and consultant. And so the first thing I want people to know is that you don't understand how simple it is. It literally is mathematics. You don't even have to, if anything that you've ever learned about accounting, ever, like anything, forget about it. It's just, it's simple. It's money in, money out. You don't have to worry about how you accrue for certain things or how you value assets, because you don't have those types of things. All you're doing is you're going to a prospect, you're saying, hey, I can deliver this service for you for $5,000. They say yes, they pay you, and you just got to make sure that you do render those services for less than $5,000. And if you can do that, you're winning.
Yeah.
Okay.
Yeah.
Now we can put a lot of context around that, and I'm going to give you some of those practical things on how to really make that work. But it's so simple. It's really, really simple. It's money in, money out. Okay. And the thing that I want most business owners to know is that if you ever want to be successful as a business owner, you have to accept that there are things like accounting. There are things like team management. There are things like running a business that are fundamental to you actually succeeding. So you can't just run away from them. You can't be like, I don't want to do this stuff. I'm not interested in it. Because that's going to make you a good business owner. If you understand how the finances work in your business, it's going to make you a better business owner. Yeah. If you understand how to manage a team, it's going to make you a better business. If you understand how to do marketing, it's going to make you a better business. Now, I'm not saying you must do all these things.
Sure.
I'm not for 1 second saying you must do the accounting or you must be the CEO and you must do all the marketing. Of course not. But you need to understand them. You need to understand how they work. You need, at least from a high level, you need to understand how they connect together, because that's going to make you super successful one day. And so when it comes to the finances, what I want you to take away, if anyone's listening to this, what I want you to take away from this is, one, it's so much more simple than you think. So forget about all the rubbish that you've learned in the past and take a piece of paper, put it down, and I'm going to give you a couple of things to write down. And as you write them down, I'm going to show you exactly how to think about your business financially.
Come on. Yeah.
And that's what you need to do. And yes, you can go get a bookkeeper, and we'll talk about that a little bit later, like what you can do to make it happen.
Yeah.
If you understand that, you are going to be wildly successful, more than you could ever imagine, because you actually understand the economics. Therefore, you know which buttons to push in order to make it work.
That's awesome.
So that's the simplicity of it. And so if you want to start your business, okay, so now the first thing, I'm starting my business, I don't know what to do. There's only one real thing you need to worry about. It's people paying you money. Because if no one pays you money, you don't have a business.
Agreed.
Okay.
Yep.
So when you're first starting out, forget about your finances. Forget about being an S corp. Forget about any of that shit. Okay. So excuse my language. Just forget about it. Okay.
Language is welcome. Be real.
You don't need to worry about that stuff. If you're really, really worried, create yourself an LLC and just, be taxed as a sole proprietor for the first time as you start out your business. The ramifications of that, unless you're going to plan to make more than $2,000 in your first year of doing business, aren't that significant. Hey, if you're planning on doing that, then you have enough money to go and invest in a lawyer or in a CPA who's going to help you identify that. So don't listen to some podcast around what you do. You go pay people who do this, like pay a doctor the money, like pay a person who does this some money to help you do that. But if you like, hey, I don't know, maybe I'll make $150,000, $200,000 this year, create yourself a simple LLC. Super simple. You can go through entity, be taxed as a sole proprietor, nothing wrong with that. Okay. And don't worry about S corps. Don't worry about all that kind of stuff. That's later on. Second thing you need to do is open up a bank account. Name it what your business name is, ABCD. Yeah. You name it ABCD. That's your bank account. And if I can give people the biggest tip of advice when you're starting a business is channel everything through that bank account. Or credit card. You can have a business credit card, whatever it is, that's fine. But be separate from your personal. Don't mix them too. And I'm going to talk to you really why that's a big thing in a moment. But don't mix them up. Keep them nice and simple. And all you need to do is look at your bank statement every single month in the beginning, and it will tell you if you have got the economics right. Because if you started with $5,000 in your bank account and you ended in $2,000 at the end of the month, guess what? Your economics are off. Simple. If you ended with 10, 12, or 15, or 20, guess what? Your economics are good, which means you're at least making a profit. Hey, you're ticking a box that not many people out there get to tick. Then we can start adding some detail to it. The second thing the bank account does is it creates separation between you and your business.
Yeah.
That I see so many young entrepreneurs, starting out entrepreneurs do, is they feel like their business is their personal bank account.
Sure.
Everything, whatever happens in their business, when they land a $20K deal, guess what? They're about to buy a new car, or not about to do this, or about to do that. And they want to spend all this money because it's theirs. And yes, it is theirs because they're the business owner. But you got to understand that your business is a separate entity.
Yeah.
It works completely different. It's its own little economy. It works by itself. It's got its own levers that it uses to pull, to make more money, to make it function. And so if you have a separate bank account, be strict around, hey, keep these things separate that you can actually start to manage it.
Yeah.
And that's the kind of 2 or 3 real nuts and bolts. Like as you're starting out, LLC, don't worry about S corps and stuff. Create a separate bank account and do things separately. Be very strict on yourself that's my business. That's it. And if your business needs money, you take money out of your personal account and you put it into your business account, and then you start functioning. You don't go and just take out your personal credit card and start swiping. Be strict around that. And you have already done more accounting and probably 80% of entrepreneurs out there.
Yeah.
Because you can literally run a statement from your bank account, and that is essentially a profit and loss statement. You just put all the pluses at the top, put all the minuses. All we take is those minuses, we just recategorize them in our world just a little bit better.
Yeah.
You have a loss statement. It's that simple. Forget about all the other rules out there. Just that simple.
Very simple. I love that. That's extremely practical advice I wish I had when I first started, because I was that guy who had everything joint and didn't know that I needed to keep it separate or the benefits of it. And I remember when I first hired an accountant being like, Kyle, you idiot, you can't do it like this. And it helped, not only made a mess for them to clean up, but then realized the ramifications of what happens when it's all mixed like that. And so I think that's extremely practical for someone getting started, making sure they do. Let's kind of progress it though. So we've built a good business. We're starting out. We're you talk about, once you start kind of eclipsing that $200,000-$300,000 and moving to that point where now I'm hiring staff, I'm ready to start scaling to new levels. How does someone know from the accountant standpoint, from the economic standpoint, what they can pay themselves, what they can pay their team, and making sure that they're not going to get to a point where they're bankrupt because they're paying more in labor than what they're actually bringing in, or what they're being able to bring themselves a paycheck?
Yeah, so that's a really good question as well. So if you when you start getting to that point where you're making more than 20, 25, 30K a month in revenue, you're bordering on the concept of building a business. Okay. Before that, you're kind of like a glorified freelancer. You kind of just like a one-man show, which is fine. Everyone starts that way. But as you start getting to that point, you're like, okay, I can't do all the work. I need to maybe start outsourcing. That's the like, hey, I'm building a business. I'm not just running something, like I'm just not running on a treadmill anymore. And so I'll answer those questions for you. The first one I want to talk about is taxes, because it's the one that everyone gets stumped on, because everyone has to pay taxes.
Yeah.
You're going to pay the IRS or something. Okay. So when you're getting to that range, the simple thing to do with your taxes is get hold of a CPA who deals with the digital world, who understands how your business works. Don't just walk down the road to HR Block, whatever they're called, to some guy who helps like the hairdresser and some guy who helps a manufacturing firm. It's not going to be enough for you. Okay. There's enough people out there to help you get your outcome that you need. Go find people who understand this world and sit down and have a real conversation with them. And you say, this is where I'm at. This is what's happening. Here's all my statements. If you haven't done the bookkeeping, and I'll tell you how to do the bookkeeping, so you can probably do that before you go there. That's what it is. This is where I want to get to. This is my goals, my dreams, my aspirations. And let them guide you from a tax perspective. Because there are so many things you can do. Every state's a little bit different. Everyone's outcomes are a little bit different. I'm a very risk-averse human being. So I'm comfortable with retirement investing. Like I'm comfortable with that. That makes sense to me. Some people are like, that's absolutely rubbish. You're wasting your money. You should be putting in real estate. You should be putting in the stock market. You should be doing a thing. There's no right or wrong answer. There's whatever fits you. And get that support from a CPA who's going to be like, okay, if that's your goal, that's what you want to do, this is the best tax structure for you to be in.
Yeah.
You should be an S Corp, or you should be a sole prop, or whatever those things could be. That's what you should do. And then you follow their advice and you carry on. At that point, you have that kind of money to invest in. It's going to cost you maybe $1,000, maybe a little bit more. You should have the money to invest in it because you are now generating a decent income.
Yeah.
That's a tax piece. From the accounting piece, and then I said earlier, take out a piece of paper and you're going to write down literally, I don't know, like 7 words. I'm trying to think of it. No, I'm actually going to make it easier. You're going to write down 5 words on a piece of paper. Okay. And if you write down these 5 words right now, you have that's the counting. This is all you need to know in your business. So the first word you're going to write down is revenue. At the top, you're going to write down revenue. Pretty simple. And next to it, you're going to write 100%. Okay, so you write down revenue, and then right next to it, 100%. The next thing you're going to write down is ads, or advertising, or marketing, whatever the name you want to give it. We call it in our bookkeeping process, advertising and marketing, but you can write down ads. And the next word you're going to write down is labor underneath it. Okay. The next word underneath the labor you're going to write down is overheads. Okay. And then the last word you're going to write down is pre-tax profits. Okay. So that's the 5 words you've done. Revenue, ads, labor, overheads, and underneath that, pre-tax profits.
Yeah.
That is a profit and loss statement right there.
Okay.
That's what it is. It's right there. That's
super simple.
Whole thing of a profit and loss statement. We now take your statement. This is what you do. This is bookkeeping 101. You take now your statement, you take your bank transactions, and you take all the little things and you just reorganize them into these categories.
Yeah.
You back out of you and say like, hey, that's how your business is functioning. Now, yes, underneath them, if we were doing your bookkeeping, or if anyone reasonable was doing it, there'll be a bunch of sub accounts like merchant processing fees or rent, or all the little things that make up some of these higher categories.
Sure.
In the beginning, who cares? Just focus on these ones for now. Because if you get these right, you're 95% of the way there. And now we just do math. Now this is like the fifth grade math thing we do. So what we do is I'm going to do it this way. Okay. So next to ads, you're going to write down 15%. Next to labor, you're going to write down 40%. Next to overheads, you're going to write down 15%. And therefore, the simple math, okay, if you go the 100 minus the 15 minus the 40 minus the 15 simply equals 30% at pre-tax profit.
Yeah, yeah.
And we have a concept called the perfect P&L, which is like a high-level view of like how do you create a business that functions effectively? And that is the perfect P&L. Perfect P&L simply means perfect profit and loss statement. There it is. So now you're building this business and you're going, okay, I want to know whether I'm succeeding. I want to know whether, hey, is this working? Or, man, I look at my bank account and every month it goes up a little bit, which is great. But is that enough? Is it good enough? Is it, what's working? Those are the questions when you're getting to that 30, 40K, because now you realize you can generate revenue. You've realized, hey, I've got this thing that I can push buttons in, whether it's Facebook ads or organic or cold emails, whatever you're doing on the marketing side, you've generated some form of a system that's got people to pay you money. Great. Now you're going to keep doing that. It doesn't stop. That train keeps going. And now you're starting to ask questions like, hey, is this working?
Yep.
And I hire people.
Yep.
Which money do I have? Okay. And how you answer those questions is what you've just written down on a piece of paper.
Yeah.
Because that is the way it should look. At least pretty close to that.
Got it. I love
all
it.
you do is you take all your advertising expenses on your statement and you put it into that category called advertising. Take all the ones for labor, whether it's your own salary, I'll talk about that in a moment. Other people, you put it into labor. You take everything that's overheads, your rent, merchant processing fees, training and education, meals, travel, whatever it is, put it in overheads and work it out.
Yeah.
Do it. Okay, I make 20K and this is 5 and that's 10 and that's 5. Work out the percentages and go, okay, man, mine are like 100, 20, 65, 20, sure, minus 5% profitability. Hey, that's not very good.
Yeah.
Okay. Well, and guess what? In doing so, you've just figured out where you over and where you under, because I've just showed you what you should do.
Yeah, absolutely.
So that's step one. And then what the only complexity that happens with this, because now we want to answer questions. Like this is just the view. Now we want to actually answer questions.
Yeah.
So your question was, how much can I pay people? Well, if you want to get to the perfect P&L, you don't want to pay people more than 40% of your revenue.
Yeah.
You don't want to be doing that. Now, the complexity here some complexity does creep in. And I've done some trainings on this. So if you are really interested in listening to this, you may want to just go look at some of the more in-depth trainings because it kind of breaks it down a little bit.
Okay.
So I'm going to do it as quick as I can. Is the ratio between ads and labor is the engine of a business. Okay. How does a business work? Well, you get people to pay you money, advertising, and then you deliver what they paid for. That's labor. That's a business. Okay, especially the businesses we're talking about. Like I said, we're not doing manufacturing or SaaS or anything like that. We're talking about these, digital marketing agencies, coaches, and consultants.
Yep.
That's your engine. Overheads are just the things that lag behind. Like I need a roof, I need rent, I need things. You're never going to go and spend more money in software to make more revenue.
Sure.
It's not a leverage point, okay? So that's just always going to hover around that 15%, and we're happy that it's there. But how much we spend on ads and how much we spend on labor is what's going to drive our business. So those are the two areas where the ratios can start to change. If you are a very strict done-for-you type business model, you're a digital marketing agency, that means your MRR will be pretty high. Your lifetime value of clients is pretty high because they're paying you every single month consistently. What we find is the ratio for ads to labor could be something like 10% on advertising and 45% on labor.
Okay.
The sum of which is still that 55%, which I gave you earlier, which is the 15 and 40.
Yeah.
But if you're like a course creator, we could realize like, oh, well, our lifetime value of clients actually not that high because, they're coming in, they're taking the course and they're leaving.
Yep.
I don't need a lot of labor to render this thing. So people could have 30% on advertising, 35% sometimes on advertising, and then the balance of that 20 or 25% is on labor. And that ratio is just dependent on what type of business model you're using. So if you want more information on that, again, watch those videos. You can get a bit more detail there.
Totally.
But that 15-40 is probably like a good average. You're in the digital marketing world, digital world, that 15 to 40% is probably a good average of where you are. You may be a little bit up or above depending on your model. So now I want to work out if I can afford to pay people.
Yeah.
So simple. How much money did you make last month? Oh, I made $30,000. Okay. What's 40% of $30,000? Let me just do the math quickly right here. Let's just give you people practical stuff. Okay. If I take 30K and I say, what's 40% of it? $12,000.
Yep.
I have $12,000 in my budget to pay for labor. Okay, great. Now I know how much I can pay for labor.
Yeah.
The only thing that adds to this is that should include how much you pay yourself.
Good to know. Good to know. Okay.
Okay. Everyone thinks like, oh man, I've got 50% profit margins. I'm doing amazing. Oh, how much do you pay yourself? Oh, I pay myself X amount. Oh, well, if you actually factor that in, your profit margins are 5%. So actually they're not very good. Okay. And people get confused by that, but I will explain it to you very simply. There's no ways you can measure the efficiency of something unless you include everything that is used to make it efficient.
Yeah.
You as a business owner are probably the most fundamental part of your business.
Yeah.
So you have to factor in what you're doing. You have to. If you don't, you're just being silly.
Yep.
So whether you're paying yourself out the money or not, there's no point assuming or thinking your business is running at a 30% profit margin when actually if we factor in you earning a decent salary, it's running at a 5% profit margin because no one wants to scale a 5% profit margin business. Yeah. It's not worth it. Go build something that's going to give you a 30% return and go scale that. Yeah. That's far more worth it. That's far more worth your time. So out of that 12K in our example should come how much you're paying yourself every single month, a nice fixed amount so you can create some consistency in your business as well as what you can afford to pay other people.
Okay.
So it scales. Hey, get to 50K. Okay. What's 50K at 40%? That is, I've got $20,000 to spend.
Yeah.
Okay, cool. So now I've got to put more of a buffer. Maybe I'm doing more work so I can up my own salary. Or, hey, it's about time I hire a VA or I hire an ads manager or I hire a project manager, whatever it is, you now have a budget to work with. And it's that simple.
Absolutely.
Debits or credits, it's just take these simple math, grade 5 math, bunch of percentages, put them in your business, and you'll create a roadmap so that you know where to go.
I love what you're saying here because, we joke around in the beginning that, accounting is not sexy, but the reality is that what makes or breaks a business. And as much as it's numbers and percentages, the aspect of how simple you made that and how critical that is monumental. And I look at that very similar to health and fitness within the body. One of the guests of our series in this Complete Entrepreneur Series, Jason Priest is one of our fitness guys, and he talks about health and fitness within the body, and very similar to like it is with what's accounting of what's coming in versus what's going out, that whole aspect of how you treat your body, and it's percentages. You can get into the macros and all the counting of your health and fitness, and it's very similar for the health and fitness of your business. That you want to be able to eat that pint of ice cream, you got to understand the calories that go into it and how they're going to burn off. You want to go hire that ads guy and he's going to be $3,000 a month, then you need to know where you're going to cover that $3,000 out of your 40% labor. And if that means that the levers change, great, no problem at all. But let's look at these percentages to make sure you fit within the plan. Now, let me ask you this question related to what you broke down, because you made it very simple. When you look at our perfect P&L, seeing revenue as 100%, advertising and marketing at 15%, labor at 40%, and overhead at 15%. What is your insight? What is your reasoning for saying that our pre-tax profit should be 30%? Why not 20% and put more into ads? Why not 40% and pay myself a little less? Why do you land on 30%?
Such a good question. Okay, so the big thing is it is pre-tax profits.
Yeah.
Okay, so remember we're going to factor in some taxes on top of it. Okay, so if you understand the tax world and you understand, everyone's a little bit different. You could use about a 33% tax rate is something that's pretty reasonable to use. To say 30% tax rate is pretty reasonable to use. In this case, that's going to knock a further 10% off the bottom line because you only get taxed on your profits. Yeah. So you take that 100%, all those profits that you made, you multiply that by 30%, you're only going to have 70% left. And so if you do the math simply, that's about another 10% off that number, which means your net profits or after taxes is probably around 20%. Okay. So one, it's a little bit inflated. Like people say 30%, that's a really good number. I can tell you now the highest profit margin like pre-tax profit margin on the New York Stock Exchange last year was like 23%, I think it was. Okay, so 30% is high. Okay, you are a small business, which means your margin should be a lot higher because you're taking more risk. Therefore, you should be getting more return than some of these big corporates. Let's not get into that economical world, but
sure.
So 30% a good, healthy number. The second thing, so the one is because of taxes, so that's going to be factored in, so it's going to lower that.
Yep.
The second thing is the healthiest thing for a small business is cash. The healthiest thing for a small business. They say the vast majority of small businesses fail because of cash flow. And I believe them. And when I say them, whoever they're out there, people that take all these surveys.
Yeah, yeah.
And the reason is because when you're a small business, it's like being a small boat in the ocean. When waves come, they affect the small boat way before they affect the big boat.
Yeah.
Okay? Because you're small. You're just small. So having an unforeseen tax bill of $15,000 could fundamentally cripple your business.
Sure.
Where it may ever succeed. But that's not going to cripple the big business. And so having cash on hand, having a healthy cash base is your insurance policy. It is your mechanism that you use to protect yourself from those volatilities.
Yeah.
And all the risk taking in your business. So the higher your pre-tax profit margins are, the quicker we're going to grow cash flow. Okay? The quicker we can grow cash flow, the quicker we can reinvest into our business without jeopardizing the safety net that we need in order to survive. So yes, longer term, when I in our business, the businesses that we work with that are making $300,000, $400,000, $500,000, $600,000 a month, that are $8-10 million a year, they're averaging profit margins, pre-tax profit margins of closer to 20%. Sometimes less, sometimes 15 to 20%.
Sure.
Why? Because as you scale, it becomes harder to enjoy those margins.
Sure.
And secondly, they built the cash flow base so they can be far more aggressive in reinvesting in their business.
I love that.
Without the fear of being out on their protection mechanism. So when you're starting out, I would say to you, and people would argue with me on this, people would have a different view, and I don't say they're wrong. Jeff Bezos is like well known for saying that, profit margins mean nothing. You just, for his whole world was all about taking market share. He's like, I don't care how much money Amazon made in the beginning. I just want to take over market share. That's like, yes, that's an amazing argument, but that's freaking Amazon. Like, come on, like there's a whole different world out there. Like he was trying to take over a world that maybe if you're trying to take over that world, then great, go take over that world.
Sure.
You're a digital marketer, coach or consultant. You're trying to create a business that's sustainable for you to run and enjoy your life. Cash is so important. And so I would recommend that you run as lean as possible up front, rather work that 60, 70-hour week, be really lean up front, have really good profit margins, build a cash base, and then you can be more aggressive and like, hey, let's invest more in ads. Let's invest in our team to make it more sustainable, to grow quicker, and to grow things. But it's so much harder to do that when you don't have money.
Absolutely.
Hey man, I think I found my new offer. This is it. This is everything I want. I think about the ads campaign. I think about it all. Okay, I need 10K to invest in. Well, I've only got $1,000 in my bank.
Yeah.
Oh well, shit. Now I can't do it. Okay, and that stifles small businesses all the time. Is they just don't have the ability to grow at the rate that they could be growing at because they don't have money. So when you start out, focus on generating as much cash flow as you can so that you don't run into those problems later on.
So for us listening now, and maybe in that point where we're saying, hey, that is so key. I agree with your reasoning. I'm 100% behind you, but I'm already behind the 8 ball. I don't have $10,000 in the bank, but I have a new idea I want to run with. And I think that this will be huge for my business. What is your view on taking a small business loan in order to fund that next idea or something like that to build up those cash reserves and take that next step? Is that ever worthwhile, or is that shooting a hole in the plane before you go down?
Small business loans, whether it's leveraging credit card debt or small business loans or taking out loans from family or whatever they are incredible mechanisms to growth. They are hugely powerful. And I would never, ever, and I would be a fool if I ever said that you should avoid those like the plague.
Okay.
But the answer that I have to give is you cannot make that decision if you don't have full clarity on what's actually going on. Because you don't want, trust me, you don't want to take out a $10,000 small business loan if the business you've built is running at a $2,500 a month loss. Because now not only do you not have the ability to pay that back anyway, because you're just running at a loss, now you're hoping that something else is going to work to pay that back. Yeah. That's maybe not such a clever idea. And I'm just using a stupid example off the top of my head.
Sure.
You just cannot make those types of decisions unless you have clarity. Yeah. So, hey, I met lots of the people that we've worked with, companies we worked with, you leverage debt in great ways, take out small business loans. There's nothing wrong with it in the world. But the question that you have to answer is, do I have all the information on hand? Do I know what's actually happening? What is my current business doing? What does my P&L look like? Because if your P&L is so fundamentally broken, that thing that I've given, that showed you to do, if that's so fundamentally broken, adding more debt and more money is not going to solve it.
Yep.
So to solve it is like, hey, I've got to cut out all those stupid overheads I'm doing. I've got to cut out those team members that I'm not using. I've got to find ads that actually convert. I've got to find platforms that convert. That doesn't require more money. That requires saving, requires cutting expenses. But if you're in that position and you're like, hey, I'm running lean, my business is looking good, I'm happy with where I'm at, but I do need extra cash to accelerate this, by all means, go for it, because it's a good decision as long as you understand the ramifications, you understand where you're at.
Yeah.
It's all about clarity. You can't just go like, oh, I hope it's going to work, hope and wish, and then it doesn't work, because then you're in more trouble.
So Adam, let me bring this home. You brought up, I love the word you just spoke there about the whole aspect of if and when you should take a loan or be able to scale your business, take that next step in your journey, the importance of clarity. And as I think about the complete entrepreneur, the reality, I say in every episode we have in this series, is that the reality there's not one person who can do it all. From all the variety of topics that we've covered in this series, if the listeners are someone like me, where they slept through their accounting classes, they don't know much what's going on with their business except for having someone that could speak to them and tell them what their profit and loss statement is and provide that clarity. Where should someone go about, first off, that's the question I should ask, is how should someone know when they should hire this out, when they can afford to hire this out? And let me kind of put it in three parts. When they should hire it, when they need to hire it out, and related to that, how they know they can afford it. And then how to, I know from our relationship, you have some personal feelings about some of the platforms out there like bench.co that aren't as beneficial, especially in the digital marketing space, for accounting. So I would love if they add that tangent, not to throw anyone under the bus who are using those people. I use them for a day, of what is your personal feelings about why you should avoid those type of platforms, and better yet, invest in someone who'd be more like a virtual CFO for you? Long question. Take it in parts.
No, I got it all. So if you're starting out business, the when is kind of immediate, because this is the fundamentals of running a business. So the when is like, I wouldn't say there's a definite time of when. Well, actually, I'm going to qualify that answer. When you should hire it out is maybe different, but when you should be focusing on it is from day one. Like you've got to understand, because it's like me, and I coach rugby, and it's me, trying to coach rugby without understanding how the game works.
Yeah,
it's not going to work. Okay, so I've got to understand how the game works.
Yeah.
When you want to start hiring it out, I would say when you surpass the 15 to 20K a month mark, you should be starting to say to yourself, hey, there's a far better usage of my time is not trying to do this accounting piece. Yeah. Up until then, if you did everything I told you to do and you have a separate bank account, you're literally taking a bank account statement, you're opening it up, you're looking at it, you're organizing things in a couple of different categories, and you're doing a pretty good job of it. So you could very easily do that yourself. And I kind of encourage people in the beginning to do that themselves, because there's such a massive learning curve there. And like, but there's such a huge learning curve to actually see it. When you get to that $15,000, $20,000 a month mark, so you over that 150 a year mark, okay? Yeah. Kind of like you're beyond just being a glorified freelancer. You would probably want to start looking to outsource it. And there are many options out there that, talk about the platforms. We can talk about that now. But you can pay, $200, $300, $400 a month for someone to do bookkeeping for you, to to help you actually do this piece so that you can get the clarity you need so you can actually start making decisions. And so the affordability is we use this range of like 2 to 4% of revenue is like kind of the range we use when we're talking to people about like how much you should be paying for this financial piece. Okay, so I'll give you the math. You're making $20K a month in revenue, you should be spending about $300 to $600 on accounting. Okay, now you take, let's say $600, you times that by 12, that's $7,500 a year. That's a lot of money. You're thinking, well, that's a lot of money. Yes, that's to file your taxes, that's to do everything. So if you could find someone who could do bookkeeping, accounting, and file your taxes for $500, great. That's like $500 a month. That's exactly what you need because that's going to really give you the outcome.
Yeah.
Okay? And that's pretty much so the lowest end offer that you're going to get out of someone who's going to do all of that, or you're going to go to like someone who's going to pay $100, $200 to do bookkeeping. Then you're going to take it at the end of the year, give it to a CPA. They're going to charge you $1,000, $1,500 to kind of do all the accounting work and to file your taxes. If you do all the math on that, it's around that 2 to 3, 4%
sure.
of your revenue. We've done the math a million times. Use that as a guideline. Okay. And so as you scale, you can start having more money to invest.
Yeah.
And as you scale, you want to invest in more high level things because now maybe you need to run a payroll. You need to have your accounts done every week, not every month. You maybe want to meet with a CFO person to help you understand your finances. And as you scale, you're going to start taking more of that 2 to 3% and investing that into not just bookkeeping, but into maybe a payroll service, to accounting, to someone to help you with your taxes more detailed, for someone to help you with CFO work. I would encourage people to continue to invest in that, provided it's a good return.
Yeah.
You bring good,
yeah.
because you're probably going to pay it anyway.
Yeah.
I've seen this. At the end of the day, if you're not paying anything for taxes, you're probably going to pay 2 to 3% because you're going to waste that either on taxes, because you're overpaying on your taxes because you've been silly, or lack of clarity, which means stupid decisions you make. There's no point in October realizing that you've had, Kajabi as a software for 10 months and you haven't used it, because that's going to cost you $2,000. Like that could have saved you a whole bunch of money right there. Okay.
Yep.
So the affordability is around that 2 to 4%. And I would say, $15,000 to $20,000 a month, you should be looking to outsource it. And then that will, when you're getting 40, 50, you should be looking to outsource it to a bigger firm. Something that's going to give you more thing. Then some of the platforms, people think, okay, I can go to Bench and I can get Bench to do it for me for like $250 a month. The only reason I would not encourage people to use that type of platform is because that platform is built for mass and it's not built for your business.
Got it.
Bench does really good work and they're great at what they do, but they are built to just service anyone. And they take all the information, they plug it into their system, they spit it out in their report, and they send it to you. If you are an accountant and if you understand finances and you understand all the leverage points and you are very well versed in this, that's a great investment of your money because you're going to get it done. It's going to be done properly. It's going to be reconciled. It's going to be great. Then you're going to get it. Then you're going to do your piece to use it.
Got it.
If you can't do your piece to use it, don't use Bench because they're not going to give you something you can use. You've got to use someone or something that's more geared at your business that's going to give you something that you can actually use.
I love that.
I would recommend everyone uses the Perfect P&L model. If you've read books like, most people have read Profit First. Okay?
Yep.
Profit First. The Perfect P&L was born out of Profit First. Okay? If you've ever read Profit First, it's an amazing book. Mike has written an amazing book about how to think about money. The only problem I have with Profit First is it's not practical enough. Okay? It's it makes a lot of sense. It's very theoretical. It makes a lot of sense at the top level, but it just lacks a bit of practical.
Yeah.
I then read a book called Simple Numbers, Big Profits from Greg Crabtree. Super practical. It's actually so practical that if you're not an accountant, you're going to struggle to read it because it's so nuanced. I realize that there's a middle world. And that middle world is what we call the Perfect P&L. It's taking this high-level view of Mike Michalowicz, adding it to Greg Crabtree's very deep knowledge, and we came up with Profit First. I would recommend any business owner in this world to use that model because it is going to give you complete clarity on what you're trying to do, and it shows you the leverage points that you can use in order to grow your business. And so don't use people like Bench if you don't understand the finances piece.
That's good. That's
go
good.
and find someone who's going to put it into a system that's going to help you really understand it.
So Adam, and kind of just wrap it up here then, when I think that's really helpful because I think that was my deal. If I see the price tag, I'm like, oh, I can afford $250. That's great. I'll get it done. But still, I remember being in that place of like, oh, I just got my talks for them. I don't have a clue what this is really saying. Is my business healthy? Is it sick? I don't know. I just see the number and is it green or red? But when people, as our listeners are here today saying, okay, I may be in that place. I need some clarity. I need to know where I'm at. I want to know more about this perfect P&L. What's the best way for them to connect with you, learn more about ABR, and see how they can get this clarity you speak of?
Yeah, thanks. I appreciate that, Carl. We live in the world, and if I'm gonna appeal to the digital marketing agencies of the world and the course creators and coaches, just Facebook, man. Just hit me up on Facebook. Just you go on Facebook, Adam Rundle on Facebook's pretty simple. You'll probably see pretty quickly from my profile that I'm an accountant because there's a lot of finance stuff there.
Yeah.
LinkedIn, Adam Rundle on LinkedIn. It's normally the best way. We have websites, abrsa.com and theperfectpnl.com and stuff like that. But you can kind of get lost in those websites because, they're essentially a funnel and, every website's a funnel and trying to get people to buy stuff. So
sure.
We're not, if you want to buy my stuff straight up, then go to my funnels, I guess. But if you just want to connect and see a little bit about who we are and maybe get some of these trainings, some of these videos, they're all on my page or they're all somewhere around there. So on Facebook's the best way to do it. And just reach out, man. Just send us a message and say like, hey, Adam, I'd love to chat to you. This is what's happening. We'll ask you some information and get you on a call with myself or someone in our team. And we'll be like, hey, could we help you? Couldn't we help you? I don't know if we can help. I'm not saying we can help everyone. We're not trying to help everyone.
Sure.
But, let's have a conversation like normal human beings and let's figure out if we can help you.
I think that's one of the things I've loved in the relationship we've developed is that you offer so much value and I'm a little tired of that buzzword, but I think you do it from a real perspective from the trainings you provide, the courses you offer, so much that you just give away and that so much you just be able to provide that insight. I know you have a podcast as well that you do a lot of trainings through and then do a lot of live videos to walk through. So I think those who are saying, all right, I want some clarity. I may not be sure if I'm ready to hire this out or not. Encourage you, connect with Adam. We'll put his Facebook link and his website link on our show notes on our website. So that way you can reach out, get to know him. And I think you'll be impressed. I mean, I heard a lot from him today. You hear that sexy accounting voice he has for you. There's a lot that I think,
South African accents, now the accounting voice. We're going to turn the entire South African population into the sexy accounting voice.
Hey man, you're talking to a marketer. I'm going to find my spin for you.
I love it, man. I love it.
I'll brand you as the sexy accountant. So
I'll take it.
Adam, thank you so much for being with us today. I think, digging into the perfect P&L, understanding how to know what's coming in versus what's going out. Absolutely practical. We'll have that outline in our show notes, mfrrpodcast.com. Adam, it's been a real privilege having you with us today. Thank you so much for your time.
Thanks, Carl. And everyone listening, go and crush it, man. Let's go build the best businesses that's ever existed, man. Thanks, Carl. We love the show.
Absolutely. Love it. Thank you. Hey, I want to thank you so much for listening to this episode of Marketing from the Roosevelt Room. If you heard something today that you would like to follow up on and be able to connect with us, connect with our guest, we will have their contact information as well as any links to resources they talked about from Facebook groups, their website, any type of offers that they gave on our website at mfrrpodcast.com. Once again, that is mfrrpodcast.com. Join us there. I'd love to keep the conversation going, and you'll be able to get all of our show notes as well as links that the guests spoke about, so that way we can really serve you. Really do appreciate you spending time with us today in this episode. Hope you have a great rest of your day.